All right, let's dive in. Today, we're going to skip past all the theory and analysis and get right to the one skill that really truly separates the pros from the amateurs: real-time execution. This is about moving from thinking to doing, and it's where you can gain that serious professional edge.
This really is the fundamental truth of trading, isn't it? You can have the most brilliant idea, a chart that looks absolutely perfect, but if you fumble the execution, if you can't get your order filled at the right price, at the right time, then none of that analysis matters. It's just a nice idea that cost you money. This is where the real work begins. So, let's just ask the tough question right up front. I want you to think about this. Have you ever had a fantastic trading idea only to watch it turn into a loss? Or maybe just a missed opportunity, all because of a clumsy entry or a sloppy exit? If that sounds familiar, you are definitely not alone. And that's exactly what we're here to fix.
Okay, professional execution starts with mastering your tools. So, step one is to stop thinking of order types as just, buttons on a screen. We need to start seeing them for what they really are: a specialized arsenal. Each tool has a very specific purpose for precision trading.
So this really boils down to a fundamental trade-off: speed versus control. Think of a market order like it's your sledgehammer. It guarantees you get in or out right now, but you have to accept whatever price the market gives you. A limit order, on the other hand, that's your scalpel. It gives you absolute precision and control of the price, but you run the risk that the market just moves away and leaves you behind. It's all about choosing the right tool for the job. Let's be absolutely crystal clear about this. A stop loss is your non-negotiable safety net. It is the single most important defensive tool in your entire arsenal. Why? Because it takes emotion completely out of the game. It forces discipline by automatically protecting you from a catastrophic loss. Pros do not trade without one, period. Now we get to take that planning to the next level. A bracket order lets you define the entire trade before you even get in. You set your entry price, your profit target, and your stop loss all in one single go. For active traders, this is the ultimate tool for executing a well-defined plan systematically, every single time.
Now, let's talk about the main enemy of good execution: slippage. The best way to think about this is as an invisible thief, one that's silently eating away at your profits on every single trade. And understanding how it works is the first step to finally defeating it. And here's the sneaky thing about slippage. It's not just one problem. It actually has 4 different faces. You've got the price impact your own order can create. There's the timing cost of just hesitating for a second too long. There's opportunity cost, missing a huge move because you were trying to save a few paise. And yeah, even simple technical lag. You have to be aware of all 4 to really get your execution costs under control. Still think it's just a few paise here and there? Let me put this in perspective. For an active trader, unmanaged slippage can easily add up to tens of thousands of rupees a year. This isn't some small leak. It's a massive hole in the bottom of your boat, and over time, it can absolutely sink your entire account. So how do we fight back? We do it with a clear, simple set of rules. Here's a professional framework you can start using today. The key takeaway is this: you have to know how big your order is relative to the stock's daily volume. If you're a small fish in a big pond, market orders are usually fine. But if you're a big fish, you have to use limit orders or break your trade into smaller pieces so you don't make waves that work against you. Okay, so mastering your tools is one thing, but a true professional knows how to adapt their strategy to the battlefield. Execution is not a one-size-fits-all game. You have to change your approach based on the current market environment.
Just look at the contrast here. It's like night and day. When markets are going wild and are super volatile, the game is all about patience and precision. You use only limit orders, you trade smaller, you give your positions more room to breathe. But in calm markets, the whole focus shifts to efficiency. That's when you can be a little more aggressive with market orders and really focus on keeping your costs as low as possible.
And that same adaptability applies to other conditions too. Let's say you're in a stock with low liquidity. Well, then you have to be patient. You break your orders into smaller chunks, maybe using a tactic like TWAP, which just spreads the order out over time. But when big news hits, it is all about preparation and speed. That means having your bracket orders ready to go before the announcement hits so you can act decisively the second the opportunity appears. All right, we have covered the tools and we have covered the strategies. Now let's put it all together. This is the moment we transform from being just a reactive clicker who's always chasing the price to becoming a systematic executor who follows a process. This right here, this is your new checklist for every single trade, no exceptions. Before you even think about clicking that buy or sell button, you analyze, you size, you select your order type, and you define your risk. Then, after the trade, you monitor, you review, and you manage. Following this process systematically is what builds consistency and gets rid of those expensive, unforced errors. Ultimately, this is what we're trying to move away from. Panic clicking market orders because of FOMO, using the same position size in every single stock, chasing the price up and down with your limit order. These are the classic hallmarks of an amateur. And just recognizing these mistakes in your own trading, that's the first huge step to eliminating them for good. So, that brings us to one last simple question I want you to ask yourself. The next time you place a trade, what will you be? Will you be a reactive clicker, just responding to the market and hoping for the best? Or will you be a professional executor, following a process with discipline and precision? The choice is entirely yours.